All right, let's dive right in. Today, we're talking about something huge, a technology that could completely reshape your relationship with money, maybe forever. And that is central bank digital currencies.
So let me just start by asking you this. Seriously, think about it. What if the government could decide when and where you spend your own money? It sounds kind of wild, right? Like something straight out of a sci-fi movie. But believe it or not, this is at the absolute core of the debate we're digging into today.
Okay, I know what you're probably thinking. Hold on, my money is already digital. I use apps, I tap my card everywhere, it's all just numbers in my bank account. And you're right, but is it really that simple? Let's peel back the layers and take a closer look at how that system actually works.
See, every single time you use a card or a payment app, you're not actually sending money directly from you to, say, the coffee shop. Nope. There are all these companies in the middle. Your bank, their bank, payment processors like Visa or MasterCard, they're all making it happen. Now, I want you to just keep those private middlemen in mind, because the new system we're going to talk about, it wants to replace all of them with one single and way more powerful middleman.
So, as we barrel towards this, increasingly cashless world, we're standing at a massive fork in the road. And this isn't just about convenience. It's a fundamental choice about the future of money itself. The two paths we could take, they lead to completely, and I mean completely, different places.
Okay, this table really lays out those two opposing visions perfectly. Let's just walk through it. First up, who's the issuer? Who makes the money? Well, with something like Bitcoin, it's a decentralized network. There's no one in charge. But with a CBDC, it's one single entity, the central bank, the government. Next, let's look at the ledger. That's just the official record of every transaction. For crypto, it's public, it's distributed, it's copied on thousands of computers all over the world. For CBDC, it would be private and centralized. The government holds the one true copy. And that leads to the really big one, privacy. Crypto gives you pseudonymity. Your transactions are public, but they aren't automatically tied to your real name. A CBDC, though, it could open the door to complete state monitoring of every single transaction you make.
So, for the rest of our time here, we're going to go down that second path, the one that governments all over the world are very actively exploring right now. So, let's get right to it. What exactly is a central bank digital currency?
Okay, so the key phrase here, the one you really need to get, is that last part, a direct liability of the central bank. Now that sounds like a bunch of financial jargon, but here's what it means. The money in your Bank of America or Chase account today, that's technically a liability of that private bank. They owe you that money. A CBDC is different. It would be like holding a digital dollar bill. It's a direct IOU from the government itself. It's a brand new form of money, not just a digital version of what we have now.
And because this would be a totally new kind of government-issued money, well, it could come with some totally new features. Features that physical cash and the money in your bank account just don't have. And this, right here, brings us to the most controversial, most hotly debated part of this whole thing, the idea of programmable money.
You heard that right, programmable. It means the issuer, the central bank, could literally build rules into the money itself. Think about that. We're not talking about policies or laws that are enforced later. We're talking about lines of code embedded in the currency that could automatically control every single dollar or euro you own.
So what does that actually look like in the real world? Well, imagine the government sends out a stimulus payment. With a programmable CBDC, they could decide that those digital dollars you just got can only be used for things like groceries and rent, and that they physically cannot be spent on, say, a vacation or a bottle of wine. They could even program an expiration date into your money, forcing you to spend it within, say, 30 days to stimulate the economy.
So let's walk through a super simple transaction. You go to buy a coffee. You tap your phone. But instead of your request going to your bank, it shoots directly to the central bank's main ledger. Instantly, an algorithm checks the rules tied to your money. Is this an approved coffee shop? Are you allowed to buy caffeine today? Have you hit some kind of spending limit? And just like that, based on those pre-programmed rules, your purchase is either approved or denied. A single central authority basically becomes the gatekeeper for every single purchase.
So as you can probably imagine, this whole idea has sparked a massive debate. And it really boils down to a classic conflict: efficiency and government control on one side versus individual freedom and privacy on the other.
So, what's the official sales pitch from the governments pushing for this? Well, they'll tell you it's all about efficiency. You cut out all those middlemen we talked about, and suddenly payments are nearly instant and basically free. They also say it'd be a huge weapon against financial crime and tax evasion because a central ledger makes it way easier to follow the money.
And finally, they argue it would make distributing benefits a breeze. You could get emergency aid payments sent directly to your digital wallet instantly in a crisis.
But then, there's the other side of the coin. And the concerns here are frankly huge. Critics warn that a CBDC could create a system of mass financial surveillance like we've never seen before. The government could literally see every single thing you buy. This opens the door to financial censorship, where they could just turn off your ability to spend if they don't like what you say or do. It would mean the total end of financial privacy. The very idea of an anonymous transaction, like using cash, something that's been part of human society for centuries, well, that could just disappear.
And here's the thing you really need to take away from all this. This is not some far-off futuristic what-if scenario. This is happening right now. Central banks in over 100 countries, that's most of the world's economy, are already researching or actively building these things. The choices we're making today are going to define what money even means for our kids and grandkids.
And that really leaves us with the ultimate question, doesn't it? In our digital lives, we trade a little bit of privacy for a lot of convenience all the time. But when we're talking about the very nature of money itself, what's the right balance? How much control are we willing to give up for a little more convenience? What's the right price? And is it a price we're willing to pay?